Welcome you all in like most awaited session on NAV calculation. Like how do we calculate net assets value in private equity, venture capital, or even real estate private equity funds. So in this short session, our key focus would be on to understand the elements of private equity fund NAV statement. Because in a private equity, it's not a fund actually, it's a partnership business, and private equity funds produce PCAP, which is Partners Capital Account Book or Statement. All right. And in a most cases, what you would see like funds follow the monthly, quarterly, and yearly accounting cycle. So depends on the investment strategy or asset class. But yeah, so the component of NAV statement would be remain same whether it, let's say, if it is a private credit fund or uh, venture capital fund or any professional private equity funds. In all cases, you would see same sort of private uh, equity fund NAV statement. So let's now discuss about, because in a theory, what you guys would have understood about NAV is like total assets minus total liabilities. That is also true, but there are ways to calculate NAV, on the basis of balance sheets and on the basis of PNL. Both approaches basically help to produce net assets value, but the balance sheet approach basically, the daily dealing funds, they follow it. So it means hedge funds and mutual funds, they need quick data because the most of the securities would be listed one, so it would be easy to quickly calculate values of securities and publish NAV on different sites. But for private equity, it would be difficult due to illiquid assets or valuation process. The valuation process is a costly one. We cannot every day, compute the value of securities and update it. So that's how you can see a difference between the hedge fund, mutual fund, and private equity. So now let's talk about the PCAP or a partner's capital account statement, which is PCAS. All right. See, this template we have designed as for the ILPA, which is International Limited Partnership Association, which the design framework for partnership accounting. And most of the private equity funds, especially for US UK based funds, they have adopted the ILPA framework. All right. So and for you also, you should know it. From that perspective, we have designed template to help you to understand how NAV statement or NAV looks like. So now let's get into it and decode the NAV part. See, to calculate NAV, what we need opening balance details. What we need opening balance detail or net of carry. What it means, if you're let's assume it you're working on ongoing fund and your fund has monthly accounting cycle. So let's say as an accountant, you have also worked in the month of November and produced NAV, right? And also you have assume it you have worked in the month of let's say December for November and in the month of January 2024 for December, right? So in this case, what will happen, guys? So every month, basically, whatever the NAV would be, that we roll it out to the next accounting period. For example, let's say in the month of January, the NAV was 100 million. So in a Feb, the beginning balance would be 100, but the closing would be after addition and subtraction of expenses, income, and assets adjustment. The NAV it could be different. Let's say in the month of February, the NAV was 120 millions due to capital calls and XYZ things. So that, the closing balance basically we carry forward to the next period, which is, to the March, and the opening balance of March would be 120 million. So this is how basically opening balance funda works in NAV. So we have now look at this, the NAV need of carry, which is let's say 25 million. Okay. So then in the month of December, we let's say fund has received the capital calls, then fund made some distributions to the limited partners, fund have let's say the valuation of securities and got to know the price has been changed, right? And then fund have also adjusted realized gain. If you have a gain, basically that will have to added, right? Then fund has also some uh, sorry the the real in case of realized, let's say fund sold some investments and have realized gain from investment. And in this case, the fund has, let's say, done the valuation of securities and got to know there has been change in the asset price, positive change, so you can add it as an unrealized gain. Then the manage the management fees, fund has paid some management fees. Basically management fees need to debited or deduct. And then even if we have, let's say fund has any transaction cost or expenses, that also need to subtract it. And at the end we will have net closing uh, balance of NAV, which is closing NAV, and that net closing NAV will call it as a net of carry. So this is how we calculate net assets value in private equity. I hope you means get it. See, in an interview process also, if they ask questions around how do we calculate NAV, so don't tell them directly net assets value formula. So you should tell them we need couple of things to understand to compute NAV in a private equity fund, which is opening balance, then capital call, distributions, realized gain, unrealized gain, management fees paid or accrued, and transaction cost and other expenses if there are any. All right, then only you can compute the the need assets value in a private equity fund. All right, this is just some sort of visualization which talks about opening balance, then closing balance, and this clearly shows there has been change in NAV because of capital call, distributions, realized gain, unrealized gain, fees or expenses. But overall, if you see, there is a growth in NAV of the fund, need assets value of the fund. So yeah, I'm done with this small session. If you have understood, then comment it as a NAV, right? And if you need any clarification, you can comment it. I'll reply to it. So thank you very much for watching this. We'll see you next episode. Thank you.